Good afternoon. Today is 13th or 14th. Today is 14th of August. So now I am going to review the trade of 28th, not 28th, 29th of July, the day where I screwed up most of the trade because of my own mistake. And it was very good day. If I would have not been greedy and followed my discipline and take 1:1, then I would have been a funded, means one funded. One is I would have been passed one funded account. Second, in instant funding, I would have pass the consistency score and take a payout. So this was the trade in gold. Up means pattern inside pattern. So this is a big pattern in gold in like 4 hour time frame. Let me show you. Let's show 4 hour time frame. So this is the 4 hour time frame. One touch, two touch, three touch, four touch accumulation, and then there is breakdown. And this is liquidity graph. So there is a high tendency to fall. This is where I make the profit, and this is where I made the loss. So let's go to the 15-minute time frame again. So this is the area where I made the blunders. So it was like this: one touch, two touch, three touch I wanted, but one touch, two touch, three touch, four touch, on top four touch. So I sold few quantity over here by seeing the weakness, means here it started to make a bearish candle. So I understood that market won't go up, and also in smaller time frame this is just kind of small trend line over here. So I was confirmed that market will fall. So I sold it here. I kept my SL over here, and what I did was I was too greedy and I was trying to take like this. So I made the big blunder. Instead, if I would have targeted this, means when I'm playing inside the channel pattern, then I should have booked at this area 1:1. See, easily done. Then again another thing was I was totally biased. Otherwise, what I did this trade, I didn't make that much loss. I sold and I booked at this area because there was, I mean, I was seeing the bullish strength. Again, I sold here. It was like 4:30 p.m. and it was 12 p.m. So again I sold, but it was going up. See, 1:2. If I was not greedy and taking 1:1, then I am here one, not 1%. So I was trading with small quantity. So suppose here 0.5, here 0.5, 1%, $50. I am funded as well as I have passed that. Again I sold it here again, and again my target was this much big. I was targeting big. That's why the problem was here, because here, see, the problem is here. What mistake I did was, this was an accumulation and then a big target. Big target was okay here because the market was ready to give a big target. Here also market was ready to give a big target, but market won't always give big targets. So this is why you should always follow your risk to reward. 1:1, be happy. Again 1:1. See, if I would have taken 1:1 over here, this one is a good trade, 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 4%. Instead, what I earned over here, like 1.5%, I lost all of that over these three trades. So instead, if I would have taken 1:1, then here 1%, 3% done, you are done for the day, means total 4%. And another thing is, here you need to learn one thing. If you are trying to two things, here the number of touches, one touch, two touch, three touch, four touch, here four touch, then if market might fall like this. If it is falling like this, then go short over here, and then you can catch a big move. But market is taking the support of this trend line: one touch, two touch, three touch, four touch. Before the four touch of this line, here is a four touch. So there is a tendency that market will go up, and there is also a fair value gap, and that's why in my mind it was saying that market will go up, trap the buyers, then it will fall. See, it went, trap the buyers, came down, trap the sellers, then again it went up to this level, then it fell down. So market is supreme, you cannot predict. You just take your portion and be happy with it. So see, after accumulating this much, there was a change of character, and then there was this much big fall. So you are correct, but market is supreme. So what two things I learned over here is, number one, you are correct. Number two, market is correct. But which one of this is more strong? Number two, market is supreme. So market will follow its own way. You have to take a small chunk out of it. When you are seeing your setup, take a small chunk out of it. Don't try to oversmart and don't try to prove your point. Okay, done. Then there was a third point. Third point is, if you are trying to play between a trend line like this, then you should not see like this. It happened third time also, you are seeing some weakness. So if you are trying to sell over here, it's okay, it's good. Like, you will keep your stop loss here, but don't target here. It might go, but there is a less probability because there need to be change of character and many more things. So target this channel, bus, you are done. Then again, if you are seeing some strength, buy, no problem. Then again it will go up or it will reverse from this. If you see weakness, then sell it here or cost to cost. Otherwise you will book over here. When suppose you are seeing this or this, don't, means when there is a change of character, sell. If it is not falling and going up, then market is okay. You have executed the trade properly, like at this area here. If you have sold, then market took the sell. Here you are not at fault. This is market is supreme. This one is perfect because there was a change of character. There is no close, but there is a little bit of change of character. That's why sometimes this is the game of probability. Remember, you might be correct, market will be correct, but market might trap and then work. That's why always have discipline in your mind. So that was the trade, and this was the trade that I took when I was not in home. So this was a perfect channel pattern. Okay, then there is a breakdown. I took the trade over here because what I said, don't try to over smart. That's why instead of waiting, I took a buy sell side trade over here and kept my SL. But what I did, I place a limit order of change of character and place a target, means place a stop loss order here, because the uh, stop loss will be large. But don't do conjugacy with your stop loss. So what happened, it went up, then it came down to your target. That's why let the market breathe. I made profit, but I didn't make that much profit. And here, this is here change of character and change of market structure also. So what happened, it accumulated and then gave a breakdown. What you could have done was take a trade. This is a trade inside a trade. This is a perfect setup over here. Go to small time frame like 5 minutes, there will be 100 candles, and then there will be, see, like change of character. One reason is there is shift of market structure. Number 2 is trend line. Number 3 is support resistance. Number 4 is market structure. Number 5 is kind of chart pattern. So this many things, so market will fall, of course.